Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. So look, the slow grinding bleed to the upside just continues. And this kind of a move, especially as it gets, 3 or 4 days old, and we're still on an upper band ride, tends to frustrate and grind up less experienced traders or traders who are super short term or think they're super short term or, want to scalp or want to do, a whole bunch of stuff that works great when the market is flying around, and they try to apply those same principles to a market that is not flying around. And when you do that, you can get yourself into a lot of trouble. You're better off just not touching it at all or doing a lot less and, following some of the principles that we follow in the room. So you can see we're walking up the upper band. It's been a little bit weaker in Globex, but look, taking a breath. Here's the hourly chart. It's just gliding in a little bit. So here's that box from last week, and you can see accelerated grind, little bit of a lull, grind, lull, shorter grind, lull to a little bit of a downward slant. But, the bears have done nothing on the downside to make everybody say, whoa, I need to rethink these longs I've been in for, a couple hundred S&P points. Certainly there's nothing going on like that. Are the bulls grabbing it and ripping it to the upside? No, because there's things that are sitting just above here, like the all-time highs. Contract high on December is 45.39.5. So this is a tape where you need to pick your spots. There are times where it's going to slow down into a grind, and in those times you can try a couple of things, but if the tape doesn't want to cooperate, you need to stop trading. We put out a couple of no trade zones yesterday and caught a couple of okay, decent trades. End up being a 9.5, 10 handle day, depending on how many of them you took. And that's got to be good enough on days like today. You're not going to rip, 20, 30, 40 handles out of a tape like yesterday. You're really not. If you did, good for you. But it, stylistically, it just doesn't set up for 99.99% of experienced traders. What less experienced traders tend to do is they try to do more. The market is slower. It's boring. It's frustrating. They feel like they have to be in every single tick. That's such a wrong approach. You got to pick your spots, make the most of it. The whole day yesterday could have been made in the first hour. We got long. It was done. They pulled it back to 15 one time. Took it back up. There was a decent short down to there. But beyond those couple of moves, there really wasn't much to be had yesterday. A lot of it was just grind. So we as traders have to adapt to the tape. We can't expect the tape to always adapt to what we want to do. That's not logical or reasonable. You have to adapt to the environment that price wants to be in on any particular day. At the same time, if you're not naturally a scalp trader or whatever, you're just going to end up doing less. I'm not morphing into a scalp trader on some days and not other days. It's not. There are too many tapes over the course of a month that do too well that allow you to get all the handles that you need to get. You don't need to be reinventing yourself every day. Because in doing that, you are always chasing the previous tape. It's very hard to, if you're going to morph from a volatility trader into a lower volatility trader, and then all of a sudden, the volatility comes back, what you'll do is you'll find yourself still applying low volatility principles. You really have to compartmentalize. And the reason I'm going on about this is what my 12 p.m. live training is going to be about today over in the free Facebook group. It's going to be tips on trading in low volatility and high volatility markets, and kind of how to adapt between the two. Because what I find is, most people do well in high volatility markets, although high volatility markets tend to scare people because they're moving so fast. Low volatility markets tend to get everybody in because they're not moving as fast. Counterintuitively, the low volatility markets are actually riskier, and I'll talk about that today, versus high volatility, if you're applying risk correctly. So, should be an interesting talk. For right now, you got volume weighted average price 45.18, 5-minute mid proprietary moving average at 16, 20 half is your daily pivot. Hourly mid band is sitting up about 21.75, going on 22. I'm flat. We're probably going to stay flat because there's just nothing to do here. You've got, you got about 10 hours worth of grind above the line. You got about 6-7 hours of grind below the line. You have very tight bands, and I'll wait for the 1 or 2 opportunities today where that stuff wants to resolve, and we'll take some trades. Aside from that, we're doing less because that's what makes sense in this kind of environment. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come join the Facebook group. Come sit in on the training. Come join the room. Come get better at this stuff. We'll make you a better trader. Take care, and I'll talk to you.